Spar was founded when a group of 8 wholesalers went into partnership in 1963 to serve as small retailers. It was part of the Tiger Brands Group and was listed in September 2004. It has a market cap of 20 billion rand, a price to earnings ratio of 20 and a dividend yield of 3.3%. Now, price to earnings ratio of 20, is this the type of stock that you're beginning into right now, Paul?
Look, the strengths of this model are that it doesn't actually do the end retail because it has these franchisees. And often franchisees in retail can be quite good partners because they're prepared to get in early and leave late and deal with the kind of labor issues and so on. It's also got a great footprint in terms of the peri-urban and smaller towns. So similar to Cash Build, all of these Spars are in places like Carolina and Kroonstad and, Zastron and Ruvel and so on. So that's good. They also have got a great developing thing with Tops, which is the liquor store, and with Build It, which is, again, a competitor to Cash Build and a very effective place to sell building equipment out in those smaller towns. So it does have its strengths.
So Tops and Build It has worked for Spar. Your thoughts on Spar Group?
No, definitely. It's a very cash generative business. It's the most generous when it comes to dividends. But we feel that they're not in control of their destiny. For this business to grow, you need appetite from the franchisees. You need bank lending, to happen. So they're not in control of their destiny. And in the race for space, they're going to be last out the blocks. I agree with Paul. Build It and Tops, great businesses. I love the Tops model. They've made buying alcohol sexy, as opposed to the badly lit warehouses with the cash register at the door, So I think they're on a good wicket.
I'm not sure whether Paul would agree with you on the alcohol side of things, but
apparently when they had their results out here, it became apparent that they had lost a few key franchise partners and that the company had to take on a couple of stores which were not doing well and that it caused them some indigestion. But so the results were a little bit less impressive. I don't know how they're sorting those issues out, but it has picked up a lane, and I guess it's kind of got the general sector drift. I mean, these stocks have been strong in the last couple of weeks. So, yeah, look, I mean, of all of them, I'm less convinced about the story because I can see how the strengths of the franchise model mean that you don't have to, get involved. The capital intensity is lower, your return on equity is higher, but as Anthony says, they're not quite as in control of their destiny in terms of their ability to manage margins and do the whole full product distribution. So not my favorite. No, I'm going to go with not hot on this one.
Oh. So hot or not on Spar Group for you?
I agree with Paul. I think in a downturn, where they're nursing some of their underperforming stores, it's not hot for me.
So 2 not hots for Spar.